everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel fluctuated upward. The domestic spot price of hot-rolled coils rose by 30 yuan ton, and the price of rebar increased by 20 yuan ton. The combined effect of capital inflow and policy expectations boosted market sentiment. At the macro level, overseas, driven by interest rate cut expectations and events such as those in Venezuela, the credibility of the US dollar has been undermined, with a large amount of capital flowing into the commodity sector, creating a strong overall commodity market sentiment. Domestically, as the first year of the 15th five-year plan, the implementation of two major categories of projects supported by ultra-long-term special treasury bonds has accelerated, lifting expectations for steel demand in infrastructure construction. However, external constraints remain. The EU Carbon Border Adjustment Mechanism, CBM, has officially taken effect. Coupled with anti-dumping investigations into Chinese steel products launched by multiple countries including Australia and South Korea, the export trade environment has become increasingly tight. Meanwhile, the new steel export license management policy implemented since January 1st has entered the implementation stage, with 300 steel products included in the regulatory scope. It will guide the transformation of the export structure towards high-quality development in the medium and long term. But now, export order receiving has been affected in the short term. On the industrial side, the supply side continued the production resumption trend. The supply of the five major steel varieties reached 8.1859 million tons this week, a week-on-week increase of 34,100 tons or 0.4%. Pig iron output continued to rise, with the daily average output hitting 2.2743 million tons, increasing for 2 consecutive weeks. The capacity utilization rate of blast furnaces in steel mills rose to 85.26%. By variety, rebar output increased for the 4th consecutive week, reaching 1.9104 million tons this week, a week-on-week increase of 1.5%, with the growth driven by capacity release after the recovery of steel mill profits. Hot-rolled coil output also rebounded, with supply increased by both mill production resumption and pig iron transfer. Overall, steel mills have a strong willingness to produce before the Spring Festival, but environmental protection production restrictions and carbon quota management still restrict the substantial expansion of production capacity. The demand side is currently showing structural differentiation. Construction steel demand has weakened seasonally but still retains resilience. The apparent demand for rebar has declined for the 3rd consecutive week, registering 1.7496 million tons this week, with a drop of 12.71%. Frozen soil weather in northern China and low-temperature rainy conditions in southern China have restricted outdoor construction. Nevertheless, year-end rush construction in some regions of East China and South China, along with stocking demand for key infrastructure projects, has prevented the decline from exceeding expectations. The domestic demand for hot-rolled coils remains stable, with steel demand from high-tech manufacturing industries driven by manufacturing upgrading growing by over 10%, supporting hot-rolled coil prices. However, export order receiving continues to be under pressure, with limited acceptance in overseas markets. Trade frictions and the new export policy have jointly suppressed the release of external demand. In terms of inventory, the total inventory of the 5 major steel varieties shifted from a decline to an increase. The total inventory stood at 12.5392 million tons this week, a week-on-week rise of 217,700 tons, indicating that inventory accumulation pressure before the Spring Festival has started to emerge. By variety, both factory and social inventories of rebar increased simultaneously. The factory inventory of rebar reached 1.4793 million tons this week, a week-on-week increase of 6.14%, while the social inventory hit 2.9010 million tons, a week-on-week rise of 2.66%, interrupting the destocking momentum. The inventory of hot-rolled coils decreased by 9,600 tons week-on-week, a drop of 0.13%, slightly easing the inventory pressure, but the overall inventory level remains relatively high. In summary, the rise in steel prices this week is mainly driven by policy expectations and capital speculation, with the fundamentals showing a contradictory pattern of rising supply, weak demand, and inventory accumulation. In the future, it is necessary to focus on the intensity of winter storage and replenishment, the progress of infrastructure project implementation, and the recovery of export orders. In the absence of strong support from end-user demand, it is difficult for steel prices to achieve a trend-like increase, and they are likely to maintain a fluctuating and slightly upward trend. In terms of operation, adhere to the principle of purchasing on demand and cautious winter storage to avoid blind chasing of high prices. It is recommended to replenish inventory in batches when prices pull back to a reasonable range and control the inventory turnover days. For variety allocation, priority should be given to rebar with clear policy support, focusing on procurement opportunities in regions with concentrated infrastructure project implementation. Billets can be moderately allocated as they are supported by iron ore prices on the cost side. For hot-rolled coils, it is necessary to closely track the progress of export license issuance and changes in overseas orders, and focus on on-demand procurement for the time being. Institutions hold the view that the macro sentiment remains robust. On the industrial front, the overlapping expectations of raw material winter stocking and production resumption are expected to squeeze steel mills' profit margins. However, the current downward trend of demand is curbing the overall rebound ceiling of steel prices. In summary, the overall steel prices are underpinned while the upside potential remains limited. In summary, steel prices have been underpinned and are poised to trend upward recently. In terms of procurement varieties, rebar and billet will show relatively stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.